Let's find out what Evan Lucas from IG in Melbourne is watching as we prepare for the local open. Evan, good morning to you. I guess were you surprised by the change in sentiment, the degree of the change of sentiment in the US session?
Yeah, it was pretty hard, wasn't it, Nadine? And having a look at what we saw from the US data last night, it was reasonably good. Admittedly, it's not hugely market influential. They are sort of low-key numbers. And as you alluded to, I think also what came out is what we saw from Li Keqiang at the back end of the National People's Congress. He was fairly front and centre yesterday with his comments. I did notice that he obviously alluded to the fact that they see, further defaults on the bond market as unavoidable. That was his words. And they also continue to say that they believe that one of the hardest things that we're currently working through is to maintain the current GDP read. Now, their current GDP is at the back end, or the lowest sort of reads that they've seen on those kind of numbers for around about 7 years. So all of that was feeding into that industrial production number that we saw. 8.6% would therefore imply a Q1 GDP read of around about 7%. So it is weak, and that is what really picked up at the back end of the US market. It already went through in Europe as well, and that was what's happened. You alluded to also the currencies. That was another good read for risk, and the yen last night had a really, really strong day, and that is also going to put Asia in focus today. Every time we see the yen go up, it's always putting pressure on the Nikkei. And the Nikkei, when we're looking at an ASX drop of around about 1%, the Nikkei can be between 2.5% to 3%. And having a look at the Nikkei futures, they are suggesting the Nikkei will open up down around about 2.95%. So a lot of real downward pressure of those worries from China. And then, as you alluded to as well, Russia is starting to amount a fairly large force, around about 30 Ks outside of the eastern border of Ukraine. There's rumours this morning also that in Donetsk that 3 people have been killed in riots, and that is just putting more pressure on things like crude as well. Watching that popping up this morning, even though Brent is down, and you can see the Russian market is off now to its lowest level since 2010. So all of these pressures are now pushing on the market. It is always a downward time of the year. March, April tends to be fairly soft no matter what, but all of this is just pushing that momentum, and we saw a really big switch in the US markets. They've now erased all of their year-to-date gains. They are now back in the red, which is slightly disappointing because it means that the bulls are starting to run out of their current upward trend, and that is means the bears are in control, and that could see us going lower still again.
Okay, so how much lower do you think we could go? We're not talking about any sort of correction here, or can we not rule that out?
Look, I wouldn't say a correction as of yet, but certainly would be looking for a contraction is the word I'd use. Looking at 53, 54 or thereabouts. Now 53.40 was the level we saw on March 3rd. If we drop below that, you would therefore expect the ASX to really sort of maybe go back to 5,300 points. It's not a bad thing. We have been running along quite heavily and quite strongly for probably around about 8 months now, considering we hit that high of 54.67 halfway through this month. That was a really good price to see, but there's so much pressure, particularly from our major trading partner in China at the moment, that just suggests we're going to move down. You alluded to the fact that the iron ore price was up 4%. That's the biggest move since August last year. Puts the fears at the start of the week in a bit of perspective that it was maybe overdone. So at 111.7 US dollars a tonne, that's not a bad price, but the copper is what is really driving our fears at the moment. Copper prices are now at 44-month lows, and considering we saw Shanghai copper, particularly for the April month, really under pressure at the start of the week, that will also feed into us. Watch Oz Minerals, watch Panos. They've been the ones to really gauge how that whole sort of play is coming on at the moment. So that's where I'm watching that this morning. We may get a bit of a pop again on the iron ore plays, but all in all, it's going to be a very, very tough downward moving market indeed.
Okay, so that's preparing us for the session. Let's talk a little bit about what else came through the overnight period. We heard Mario Draghi from the ECB talking up forward guidance as the way to curb euro strength going forward. Yep. It's up about 7% versus the US dollar in the past year. What are the chances of success in that regard?
Yeah, very interesting sort of developments coming out of Mario Draghi. Obviously, being a central bank, they tend not to sort of look or listen to sort of corporates complaining about the currency, but it's the nations that are really worried about that. And he's always been concerned anything above 138 was when he really started to talk about deflation, whether or not, they are sort of seeing CPI and also PPI starting to become subdued because you are becoming quite an expensive place to do business. And that is certainly what he was alluding to in his forward guidance, that they are worried about the consumer prices, that they are starting to sort of plateau because we are now touching 140. It came right off last night when he did say that. And again, also risk fears coming there, considering the euro is a risk currency. But it does mean that, again, if you want to see the robust sort of movements that we want to see from the Europe region as a whole, the currency does have to come down. There are suggestions that he may cut rates further. I find that fairly hard considering they're already sitting at 0.25 of 1%. It would mean negative real rates would have to come into the European Union. If he did that, it's a fairly interesting ask to see that. And the growth at the moment is moderate enough that he could probably push it too fast if he did do that. So that's his juggling act that he's got. He's got a currency that is certainly on the way up and starting to make things difficult, and that's why he's really trying to force his forward guidance. It's similar to what we're seeing with the RBA here in Australia as well, that they've got a real juggling act with a currency that remains stubbornly high, but an economy that is showing signs of green shoots, and that is the current situation that a lot of central banks are finding themselves in. So interesting developments out of euro. It's why at the moment you can see their equity markets under pressure as well. So very, very interesting and developing times at the moment. Trading in currency has been very, very hard. They're almost like Teflon, those risk currencies, and that is why at the moment it's very, very hard to sort of gauge where the markets are at.